Good morning and welcome back to the Opportunistic Trader for a new month, October 1st, Monday. I hope everybody had a good weekend. Our Dolphins got annihilated by the Patriots, but at least it wasn't torture to watch because it was over in the first quarter. Overall, the weekend was
It was
good.
a sympathy killing. It was a sympathy killing.
It was. It was Brady at his regular, but I don't really want to get into that. Hopefully, Publix was actually going to give out free subs for a week to that's a supermarket in Florida for the Dolphins if they won 6 games in a row. So I guess that is off the table because they have a loss. But let's get.
We all know the hedge for that is to short the Dolphins for the dollar amount of the subs.
Exactly.
So hopefully you
arbitrage unlimited subs, depending. So anyway, let's get to markets. The news over the weekend, I guess, was this NAFTA deal.
Right.
When there was no NAFTA deal or trouble in NAFTA, the market never sold off. But when they get NAFTA, it's more bullish. So the market's up 15, actually 16 and a quarter. Now we're shorted. We rolled up a little bit by selling puts. We'll sell puts again today. Our ultimate stop out will be 29.45 on this trade, but we'll try to take in as much premium over the week as we can, and we still have a bias to the downside, even though it's beginning of the quarter and NAFTA. We're short oil here. Oil's up very, very small. It actually acts a little bit weak, so don't feel terrible about that position yet. But starting the new month in the hole is never fun, but we'll work our way out of it. Had a nice month last month. I don't know exactly what the win totals were, but it was a pretty good month overall. Hopefully everybody in the chat and in our membership did well for the month. We had a good month. On to the next. We can't, it's like being a hedge fund manager. You can't think about the last month. You got to think about how you're going to make money this month. So, we'll come up with a lot of good ideas and thoughts, hopefully during the month. Hopefully volatility will increase and there'll be some uncertainty here. Scouring the markets overseas, Japan was up about 50 basis points, and China was up 1%, and the Hang Seng was up about 0.75%. So, in the 0.5% to 1% area over in Asia. Going to Europe, those markets are underperforming as they have through this whole move. The DAX is up only 45 points. On Friday, it was down 245 points, so it looks a little bit heavy. Obviously not holding us back, so there's not a lot of correlation between those markets as the spread between the two keeps widening. So we'll keep an eye on that. Looking at the S&P, up 17 and a quarter now. NASDAQ up 52. Bonds are back to where their yield highs were, just a tad bit below. I think the 10-year is about 309. It got up to 311. Those continue to go higher. I don't know why it doesn't have an impact on our market, but at this point it doesn't. I don't know if that yield level's 3.25 on the 10-year or 3.5, or even in here, because I don't think the market could sustain these rates for a long period of time with markets making a new high. The currency markets, the dollar is flat against the euro. And then the big trade, I guess, is in the Canadian dollars back down to 128. I think they leaked this thing because when they thought there was no deal, the market never really traded through the high at like 132. It only got up to 130 and some change. So, people wanted to short it. As far as stocks and stock news over the weekend, Elon Musk settled with the SEC for $20 million. That's literally a joke. And he said he wasn't going to settle on Friday.
He's already tweeted this morning YouTube stuff on by Naughty by Nature. Sorry, I don't mean to add color, but it's a travesty of justice. Let's put it that way.
What? I didn't see it. What is it?
Oh,
I
it's,
saw he said he was going to
I
be
didn't even click on it.
profitable.
But he actually tweeted a Naughty by Nature YouTube video. I don't even know what it is, but it's it's an old rap band. But the implication being, I don't know. It just doesn't make sense why you would do that if you're a professional at all. That's all.
Well, he's certainly not, and I don't know, the lawsuits that are going to keep coming, because the bottom line is if the SEC went after him, any individual investors could go after him. So,
right. Class action lawsuits by
massive
longs and shorts in the stock can go after him.
Yeah.
But Tesla, I guess, is safe now, right?
Yeah, and the funny thing is, before he even did any of this, okay, the bottom line is the stock was trading at 304 that day, and we looked at each other and we were like, this is crazy. It snuck up like $25, and then it went down $40 or $43 on Friday, and it's up $45 today. So
everybody trades inside information but us, it seems.
It's interesting. So, you have that. And then there was an announcement in GE today, which has been the biggest dog. I think it closed on the low on Friday that it had since 2009, when the stock went to $3 during the crisis that everybody forgot about. Now the stock is up 15% pre-market because they took a charge against their power division, and then they fired the CEO Flannery, who hadn't even been there, I don't even think, a year. So I guess they like the fact that he's out and that they took the write down. And GE, the sum of the parts are worth a lot more than where the stock is trading. So it's going to be interesting to see how they take care of the shareholders on that. And as far as other equities, Micron is trading at 45.67, up 44 cents. We still like it as a long. FXI has done a bit better. It's at 43, up from 40. And the old Tilray is back to 100, and I saw it trade at 160 this morning. It traded 98 last week, so that's still a good mover. And overall, looking at the straddle for today, we're trading at 35. 35 straddle for today is pricing at very, very little, almost less than $7. So you might as well pack up your suitcase and go home if the straddle is right.
You should be at 650.
right. On a $3,000 instrument, it's 20 bips, 20 bips for the whole day. So anyway, that's sort of it as far as what I see. Apple's up 2, as it always is. It's either up 2 or down 2, and again, oil's up slightly. I know you touched on gold in your show. I listened in this morning. It was pretty awesome.
Well, thank you. You actually could hear it?
I could hear it. Yeah, I heard it. It was
16 screens for trading, but I can't operate one for a broadcast. But good. I'm glad it worked for a change.
Nah, you did a nice job. So we're coming into the month. We're not positioned well today. We're going to have to make some decisions. That's part of trading. It kind of sucks, but that's unfortunately what we do. And sometimes the hardest part of trading is just the finality of. It's the hardest and the easiest part, as you know. The hardest part is taking the loss of money. The easiest part is when you do it, it feels really good. So that's sort of where we're at. I don't have any unbelievable ideas coming into the month with any preconceived notions. I do think oil will trade lower. It can't sustain up here. I don't see how it's not totally impactful to the market and the economy with a $75 handle on crude, when a year ago it was under 30, or 2 years ago.
But strategically, you're not walking with heavy biases. But isn't that how you trade most of the time anyway?
Yeah.
I mean, not to make an interview, but how many times have I listened to you and hear you say nothing really is interesting, and then 10 minutes later it's like I'm short the S&P, I'm long oil on this, and that's
Right.
because a lot of what you do is tactical, and it's actually kind of good to go in with a clean slate today, because we, anyone who's trading will be able to react properly.
Well, I
You know,
don't exactly have the clean slate. I have two positions not working. Oil, very, it's not very much against me. It's like a dime against me. It's
right,
nothing. But the
right.
S&P is definitely gone much farther against me. I'm down probably about 20 handles, which is more than we want to lose. I'm trying to stay convicted in this trade because I do believe we're going to trade down. And I'm going to try to finance it, which I've always been able to do for years and years and years by selling other options against the position and putting a cap in on the upside. So maybe what we'll do is we'll put a month in cap in, maybe at 50 or 60, and be able to stay short, for a period of a couple of weeks at least, or a week, and then trading around that core in some
Gotcha.
way. But, we're definitely not clean. We're definitely starting the month a little bit in the hole. And you know what? I probably should have known, because they mark the market every beginning of the quarter, every end of the quarter, every beginning of the month, every end of the month. I bet you, it's interesting. I bet you if you ran like a model and you bought the last day of the month, sold the first Thursday of the month, bought, the last, Friday of the month, sold the last, Wednesday, the Friday before the last day of the month, and sold the last Wednesday after that, you'd probably be up more than the S&P, to be honest
You'd
with you.
probably be. I think you're describing Citadel. That's probably what they've been doing for like 5 years, or
Mm.
any algo route, any good algo out there. But yeah, I hear what you're saying.
I mean, that's what they do. They just buy, and they sell towards the end of the month, and then they rebuy at the end of the month, and then they sell in the first 2-3 days of the month, and
Yeah.
it's been going on and on and on. But today I don't, bonds stick out a little bit. Volatility, not, it's back into the 11 handle, but it's down only about 1%, on a 16 handle move. I guess it can't go lower because it's at 0.
Right.
It's amazing that it's been so many years of this. But we're heading into a new month. It is October. Usually it's scary, like Halloween, but it's not starting out that way. So we'll keep an eye on all of the stocks that we watch, and markets in general. I don't know if you have any. I know you, before we got on the air, you had a gold question. You want to talk a little bit about gold? And,
Yeah, I
been,
don't. Yeah, I don't have much to say to say about gold. I mean, I think focusing on the equity markets and oil and anything else that you want to talk about should be it. But there is one question from a member subscriber about silver, and he says, "Do you think silver can rally this month on its own merits, not in sympathy with gold or copper or short covering?" The answer is yes, with the exception of short covering. And just very briefly, there was a lot of buying in silver in the 1530 area. I do think the shorts in silver are generally weaker than the shorts in gold. I also think that silver, on a good day, is Goldilocks. It's part precious and part industrial, which also works against it on the way down, which we saw on the way down. But I think right now, if you look at Friday as an example, silver, if we're going to have a substantiated rally in precious metals, silver actually has a better chance of leading the way. But to answer the question, not in sympathy with gold, yes, it could rally. Not in sympathy with copper, yes. Not with sympathy and short covering, no. I think it'll be started by short covering. That's where it has to be. And I would keep my eye on palladium, as another trader educated me that is the professor for silver, which actually leads silver directionally. So the answer is, if you're bullish gold, buy silver. If you're bearish gold, sell silver. And I do think silver can move on its own merit, as it has in the past. Hope that answers the question.
Okay, is silver a bigger mover percentage wise than gold on a daily basis?
Yeah, if it is. If you're going to have a trend, well, on a daily basis it is, but the bid ask is wider. It's almost prohibitive. It's a lot less liquid. It's like as the XMI was dying when the S&P was growing. The liquidity dried up in that. Back in the day. So silver is 1.5 times volatile as gold. It's a bigger mover. It can move on its own merits because it's consumed like oil. You could see spreads go backwardated on occasion. Um, uh, and it's kind of like I don't have a lot of money. I'm bullish on precious metals. Okay, so I'll buy a silver contract. And people plow into silver and out of it a lot quicker. It's silver is it's become like trading houses. It picks a direction, it goes, and if you're not on board for a week, you can't play it because the bid ask is prohibitive. Uh, I'm not a big fan of trading silver futures unless I have a well-defined stop. But you get stopped out a lot in silver. Uh, it's just not it's not as deep as gold.
Yeah, I don't really trade that. I've watched it. I had a number of traders that have traded it for me in the day. I remember, I don't know if it was last year or the year before, it debacled like, I don't know if it was a fat finger trade, but it moved like 15%.
Yeah, I remember that. In
you
fact,
know.
it went down there, and I think they actually some people that were long options. I guess this is a reason not to be long options. Scalped gamma by buying down there and had their prices raised. So so
Oh,
uh,
really? Yeah,
oh
I
yeah,
didn't.
yeah, yeah. That's just a fact. Unless the people that are telling me that we're not being honest. But yeah, so if you look at the history of silver, silver went to $50. I don't think it's going to see that again. Silver's a broken market volatility wise right now, and uh, which means it'll do nothing and then gap and move for 6 months in one direction. Yeah, you can't play unless you're playing options, and you have to have your bid hit or your offer lifted in options. That's how I look at it.
Okay. Yeah, I haven't traded it, but I see that it moves much more than
Yeah,
gold. Um,
silver will be kind of like if you're what silver to gold right now movement wise is like Brent to WTI. If gold rallies, silver rallies a bigger percentage point normally. If gold drops, silver drops more. So it's like Brent to WTI. It's more volatile, but it's not like Brent. It's not deep, but that's basically all it is. I mean, that's pretty much it.
Funny, I'm looking at the bond market, and to me, I don't know how the market could hold up. Like I remember, discussing this at 290 or 287 on the yield, and everyone was like, "Oh, if it gets above 3%," and now we're like 310, and nobody cares, and we're gonna do a skip probably to 3.25, and then look at what it looks like. But this guy is Pal is for real, and he's going to raise rates again. I think it's 95% priced in for December, which is shocking. Um, so it'll be interesting to see when Fed funds goes to 2.575 where the 10-year is going to be, because the curve is it's so flat right now. So you know you got to keep an eye on that for sure. Um, but it's interesting to watch. Like I'm watching, it's just it keeps going into the 139 handle on the 30-year future, and then bouncing back into the 40 handle. But if we get
Right.
down in here into like the low 139 handle, I think that we could have a significant backup, which would cause the market to really, I think the S&P really correct. But again, A, we're not there. B, it may not happen if we get there, but that's a trade that I would cue off of just watching the bond market, back up. And at some point, if the curve steepens in any way, everybody's on this same flattener trade. They've been on it for the longest time.
Right.
So, it'll be interesting to see if it becomes a little bit steeper and how the market reacts to the next Fed move. But I didn't know if you had any thoughts on the bond market here and levels or. anything
Well,
like
the
that.
only thing new that I can add, and it's not a short-term comment like you're plugged into, but I found the chart over the weekend that shows, and it's really not a forced correlation, but there's a high correlation between the VIX and bonds, uh, uh, and there's a nice chart showing that. But it's kind of like a 3-year extrapolation, meaning bond yield. Basically, you're seeing a flattened yield curve, and the VIX curve is flattening. The point is, low VIX and bonds lead the VIX in terms of yield becoming volatility. I'll put that. I don't want to talk about it too much. I just want to put that
No, I'd like to
into.
understand that because just myself looking at it, when yields were at zero, we had a zero VIX, and now yields are at 3%, and we have not a zero VIX, but close to it.
Right.
Lowest levels.
Well, I
So
think the intuition that you have and that we all feel, bonds and VIX being, correlated for whatever reason, safety or whatever reason you want to come up with. I think the chart will tell it all, and uh, I'll throw the chart into, um, I don't know, maybe news. I'll put it into news Q&A, because it's actually a really good chart, and it might click something in your head on the short term, stuff that you might want to trade.
yeah, I mean, I'm just watching it right now. A little set that we didn't participate a little bit on the downside or tick up in yields, um, but haven't traded bonds really in a while. But
You've been
they're gonna
using
get
bonds since we've started, I think, as a tell or an indicator, for the more active trading that you're doing. I mean, yields are stabilized above 3%. I think we're going to monetize our debt for the next 20 years, like 1970s type of inflation. But that's not going to affect your trading today.
no, for sure. I can't worry about.
I'm offended if it doesn't, though.
Although I
But
will
yeah,
say, for full disclosure, I'm long GE, not at the opportunistic trader, but in a long-term account, and it's actually up. I haven't seen it go up in like 2 years or 3 years, but it's up 15%. I think I may be whole on it or up a little at this level, but it's a trade that I'm not going to look at for a long time, and you know, feels a little better to be up than down. But those, those names that I think are, debacle that are real entities, I like to buy, in a long term account. But that's really not what I do at the opportunistic trader. But when you talk about 20 years, that stock I might have for a while.
all right. Investing is for rookies. We don't do that. We just we we have to be in and out before the end of the day. Even if it's not day trading, it's certainly. Uh, I don't want to leave my money out there,
Well, yeah, I mean,
except for
what's
529s and what have you.
what's good about what we're able to do here is we're able to utilize options to basically hedge out the risk and exposure. So if I wanted to say short S&Ps, I could buy a call at 29.50 for 3 weeks out, pay, $5 that stops me out at 55, and then I can sit in the position for as long as I want. So by utilizing options or doing option structures, as Tommy Mac shows, I mean, you could just take advantage of the options as a hedge against the underlying futures. So you know
Yes, which is
we're
the anti of what I do, and it makes me cringe, but it works.
well, you're just buying options for the most part, right?
Who, me? No, I don't just buy options. I buy options and hedge them by buying more options. Come on. No, but uh,
But
I
you're
think
just
I think it's
trading the
just it's just
gamma in the position,
oh
and you're looking for bigger moves. Like for me, I'm almost the opposite. I'm looking to scalp small, but hedge the outside risk and trade around positions.
that. that's kind of that is actually the inversion of historically what I'll do. Uh, uh, Basically, I'm a long tail type of person. As an options trader, I'm really not. When I'm trading options, I'm really not that different than you for different reasons. Like I almost always had a little negative gamma for the first standard deviation either way, and I was basically back spread all the time. So I would make my money trading intraday, losing money on my short option position, and just be positioned for home runs. So it's kind of like the same philosophy but inverted. Uh, the problem is I could rarely stay short options long enough to make money off of them, which I should have. Let's
Well,
put it that way.
question for you. Like people always ask me, what's your best trade, or where'd you make the most money, or what was your home run? And really, for me and my trading style, never hit a home run. Never. I mean, obviously, I had a lot of good days, back to back to back for years and years, going on pretty much forever, of when it clicked in the late '80s, early '90s. But like for someone like yourself, do you remember a trade that you killed it on?
No, I mean, well, yes, but it certainly was totally outside of my style. As a market maker, I was a singles hitter. As a volatility arbitrage guy, I was always a singles hitter uh, 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 who had theta. So I would be short at the monies and long wings in a ratio format. So there was never any one position that I consciously put on that became a home run. It was kind of like, I guess the baseball analogy is, I was a singles hitter who occasionally hit a home run, um, uh, but I never, and I hit a home run because I was positioned to not blow out at night.
Right, but my
Basically, the
question is,
reason,
how did you not hit a home run? If you're short at the monies or straddles at that case, and then you're
right,
long outside, straddles a bunch of upside,
right.
gamma, and how like if gold moved $50, how did you not hit a home run?
Oh, I did. I mean, I hit several, but I'm just saying that I wasn't going out there saying I want to have a back spread on. It was actually a function of being undercapitalized. Options traders are undercapitalized relative to futures traders, and so or risk managers would make them tight on the risk. So what ended up happening was we had a model, Larry Cooper Neff, okay, and our model made us buy wings. It always overvalued wings. Now wings are where they actually our model said, but so we were constantly buying the 5 delta call, and so I was constantly, to get out of my decay or theta erosion, selling an at the money straddle. So I'd have 1 by 10s on. So to answer your question,
Holy
yeah,
cow!
yeah, oh yeah, oh yeah, I made a ton of money on home runs, but it wasn't. It was more designed to be like, I'm eroding too much, and I can't justify selling these options because I can't change my sheet. And it ended up becoming an insurance play that would make me money. So in '99 during the Ashanti play, in '94 in the silver squeeze, home run. '97 silver squeeze, home run. '99 Ashanti collapse and gold went, volatility went to 120% or something like that. Those were home runs. But I wasn't looking for home runs. I was just making sure that I could finance a bigger position, upside or downside. By the way, I always traded better to the downside in oil and to the downside in stocks and to the upside in gold in the direction of the skew. But yeah, there were home runs. I mean, uh, the home runs in oil came when the market came off. The home runs in natural gas were when they rallied, and that's because I was always long wings. Uh, but that was a position design. Oh, if the market rallies $10 in oil, or if the market drops $10 in oil, I'm going to blow out. But if it drops $12, I'm going to retire. It was one of those type of things. So you would just hope it would keep going.
No,
I
it's
found that chart. I'm
interesting.
going to put it up on the screen now.
But it's interesting because I traded ratios the other way. Like I had I would do 1 by 3s. I would buy the at the money call, and then I would sell 3 out of the money calls. Try to do that for a small credit to me, and then trade the gamma, short gamma, around that by trading the futures. And that's in a way why we never really hit home runs, but we always had positions that were in play, and and making money. And, we did that to the put side as well. And, we were able to trade around these positions. So like today, if I'm looking at the markets, I might buy the 35 call. The index is at 33 and a quarter for 3.30 cents, 3.30, and then I'd sell 2.5 times that of the 40 calls. And then I'm protected up to like 42.5, 43, which gives me 10 handles of room. And then as the market started going up, as it started to move, maybe I would sell a put spread to bring in some cost, move my price up to 44. And the only way that I would really have to go to hard futures is if the market really trended up fast, and then I'd have to just reach. But those positions work, they still work really, really well.
Right. But I think we manage risk very similarly, just in an inverted way. My position would be actually similar to your position. Look at it this way: I'd be short the at the money and long two wings, or in a more complex structure, and you could see how this would work out. I would be long one at the money, short 2 25 delta calls or puts, and then long 10 5 delta calls or puts. And what would end up happening would be I would panic sooner than others. So I can never let my immediate positive gamma be hedged. I used to let it run because I was short options. And then above that, I would cover those options, just buy everything. So I kind of day trade my negative gamma.
But to look at that position, you would be short the 35s and long the 45s or 40s or 45s. And really, you're not making money until we move 10 points.
Right. And I was counting on a lot of intraday day trading and options. So in markets without a lot of volume, I got killed because I would have theta and negative gamma, or decay and negative gamma, and not be paid to own the position. So my way of trading was good in some markets and horrible in most markets. But I survived. So I would say I didn't have a stomach for negative gamma. Let's put it that way.
Oh, really? I think it's the best way to trade.
Well, but I had 10 guys under me, and a lot of them had negative gamma. So I just kept looking at the whole portfolio going, and I was like, I was the insurance guy. In fact, I was you. Like, in 1999, we had traders in our organization in gold that were short I forget the strike now, it was so long ago. Gold was trading $240. That was short the $300 call. Thousands. People were selling them at a tick. And I was like freaking out because our company was short like 3,000, which was a lot, in those days.
Was that in 98 or 99?
That was in 90. Yeah, it was 99. It was a Y2K thing. But Ashanti was the mine that blew up. And so I just freaked out and went out and bought like 3,000 of these things because I couldn't take it, And so I ended up distributing them to the other traders when I should have just kept them for myself and let them blow out. But the point is, I was you in a reverse way. I had traders that loved to sell options, and so I became the opposite guy. Alone, I should probably trade more like you, honestly.
Well, listen, we're adaptable. We look at the volatility pricing and whatnot, but it's just a vanilla way to really put a position on and then maybe middle the market when it goes out at the top strike or it goes out in between. And you don't have a lot of risk to the downside because the cost, like let's say we were to do a 1 by 2.5 right now, you could pay you could pay 3 and sell 2.5 times $1.10. You're looking at 275, 280.
Guys like you and Tom can do that. I'll give you an example of like of why I can't do it. I would actually take 1 by 2s out of my position your way, long the 1, short the 2, and just put it aside and just look at it and just say, usually it'd be a put spread, like in oil, heavy put skew. So I would, oil was trading $50. I buy the 35 put once, and then I would sell 225 puts, and I'd be like, hey, I'm golden until we get to 15. And as I'm making money and the market's going down, I'm freaking out. Like people had to duct tape me to the chair because I wanted to butterfly it or buy one of them back in. So it was just, I wasn't wired that way, and maybe I need to be in therapy.
No, no, there's just a lot of different ways to trade. I mean, the long gamma guys and the long volatility guys have just gotten crushed in the last 5 to 7 years. They don't even exist. I have a buddy of mine. He's actually relaunching his fund, and he's a vol guy, and I think it's a good place to be because for him, when the market vol comes in, he doesn't lose a lot. And when the vol goes crazy, he does very, very well. It's been very tough to do very, very well because we've only had probably 2 or 3 vol spikes since 2009. But, he's hanging in, and I think it's a good time for his strategy. But as you know, there's a million different ways to skin the cat or to make money. So, your way works at some point. The only thing that I have a hard time with long a lot of options, especially outward wings against, markets that are very close to the money, is you need an explosive move. And we've been talking for, months. The S&P hasn't had a 1% settlement in months. I mean, I don't know what.
If I had been trading as a market maker on the S&P, I would have been killed because I play long the skews so I can trade more when the market drops. In the S&P, that's how I would trade, and I would have been absolutely murdered because when you have a skewed market, you expect the trading to be better and the volatility to expand in that direction. But we haven't had the moves, and we've had the moves. Volatility is disappointed. It's been a disaster. I think the only way to play volatility right now, if you want to play from the long side, is to gingerly buy wings when volatility is oversold, and make sure you're diversified across markets and hope for that move like your friend does. Because putting too much premium on right now is suicide.
I mean, listen, it could work. I personally don't trade that way. I don't like it, but people have made a lot of money doing that. Your timing has to be right. I just think it's counterproductive to trading the way I trade. So, the bottom line is if there's not a lot going on, there's no trading. If there's a lot going on, there's a lot of trading. So,
right. But as an option guy with a massive portfolio, you remember the fact that you would have to massage positions all the time, and so you'd have to rationalize risks. This, that, or the other thing. I'm not to change the subject, but I know that this is an interest to you. I put up the chart in the chat room under the commodity section. It's the yield curve. Here's the title. The yield curve has a strong leading relationship with the VIX, and it yields by like almost 3 years, which is not something you can handle today. But if you look at it this way, you say, wow, the VIX is due for a rally based on how the yield curve has flattened so much. I think it's a pretty cool chart.
Yeah, no, we'll keep an eye on it. I mean, it hasn't happened yet. And listen, you need a down 1% day to even get anybody even excited or nervous. Right now, there's not a lot going on.
Would you do me a favor? Because I have a question. If you can talk to your friend who plays vol from the long side, and show him that chart and ask him how he feels about being off the record being long cheap VIX calls based on this chart or some other reason, that would be interesting to learn. Because I'm always looking for someone who plays vol from the long side from a different discipline, and it sounds like his discipline is different than mine.
Yeah, I don't know exactly what he does what you do. He's looking at vol skews and stuff like that, and
right.
I've worked with him for a number of years, and he's obviously it's a different world that we live in today than what it ever was. So vol would pop every couple of months or even less, and we'd move percents a day all the time. This is a different world, a different mantra. So you have to position basis the world and the mantra that we have. So, right now, vol is extremely low. Keep an eye on it. And I wouldn't even attempt to be a buyer of options, unless
Maybe he's trading contrary now, meaning maybe he's not buying. Like I'm the guy who buys vol when it gets going. Maybe he's the guy who's buying it at the other end. You know,
yeah. No, it's funny. I'm watching. Sorry to interrupt you, but I'm watching my screen, and the dollar just got a little bit weaker. But it's the funniest. It's actually funny to watch these currencies, especially. It's so computerized. It's like I'm watching my screen, and it's ticking like wild. It's not moving, but it's just like tick, 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 tick. And I said to Mike, I just pointed to it, and I'm like, and then he's like, as soon as I point to it, he's like, oh, let's see what the news
Well,
is.
it looks like the pound's moving higher. UK said to plan compromise on Irish border to get Brexit deal. And it looks like the pound just moved from about 130.12, which is about the low of the day, up to over 131.12. Now we're at 130.85. So that's the news for right now.
And as Vince and I would say, where is the British pound?
I actually said it. I think I said it on the gold broadcast today. It's become we're all going to get our asses handed to us when it goes to 140 or 120. Let's put it that way.
I don't know. It just seems to be at the same place every time I look at it, so I don't get too excited.
Mike, do you know what the Irish border concept means? It basically Ireland wants to have their own carve out. Is that basically what that's about?
I don't have the latest on that.
Okay, cool. I'll look it up.
I don't know. S&P.
But it seems like the general news is that it's more friendly towards getting a deal. But, that's for right now.
You know what's interesting? Just I'm not an expert in in Brexit or anything of that sort. But to me, like everyone's like, oh, if they get the Brexit, it's bullish for the pound. And listen, when they exit, it's going to be years of pain for them. So I don't know what they're obviously afraid and nervous to do this, or else it would have been done a long time ago. And nobody knows what the repercussions are. But my thought is, when they're all alone in the darkness, there's going to be nobody there to help them. And I don't know, Britain against the U.S. 1-to-1. I don't know. I would be betting on U.S. dollars. That's just myself. So we'll see how that trade, goes about. But it's funny when they get positive Brexit news, everyone's buying, pounds and whatnot, and when they get negative news, they're selling. And I don't know how that's going to play out when it actually goes down. So it'll be interesting to see. But I think we're probably years away on that potentially. Go ahead. I'm sorry.
To get back on short-term trading, Crude just Crude's not moving much, but it looks like it's softening a little.
Moving like
no
pennies. I mean, I don't know if you're looking at Brent. I don't.
Okay.
I don't know. Where's the Brent, by the way? What
I
is it,
have
about
that.
82, 83.
No, it's the spread is around $8 or $9.
It's above 9, I think.
Let's see. Oh, yeah, I'm sorry. 83 to 73 and a change. So it's 9.5. Yeah, it's 83.03 last right now.
It's an amazing thing. At one point, 6-8 months ago, the thing was like $2. So it's all people.
Yeah, I got a strong opinion about that, and I think that's a comment on how we're going.
What's your opinion?
Well, I think it's a guy who was an exchange analyst taught me something I think that's very relevant. He said that exchanges do best in the regions of demand for a product, not supply. So while we are pumping out more and more oil and we're net sellers of oil, that's more a comment on the fact that we're not consuming our own oil. And China and the East are buying oil, and they're buying. Brent is the benchmark now, not WTI. We are the oil banana republic, so to speak. So even if WTI is better than Brent, I wouldn't know. But what I'm getting at is that spread. I've always had to watch that spread when I traded oil, but that spread will come in when the market drops, and that spread will blow out when the market rallies. But that spread will over time, I believe, continue to widen because more and more oil is going to be benchmarked out of Brent. And I think if, to be crazy and do black swan stuff, if they run out of oil in Brent, the next benchmark will move east, maybe Nigerian sweet oil. I'm just saying, the cost.
I knew you were going to throw something crazy in today.
It's going to go. It's good.
I knew it.
Oh, okay.
It's
All
a
right.
Monday. What's the
Look,
market
they're
on
going to run-
Nigerian oil?
All I'm saying is that
Wait, we're going to run out of Brent and WTI?
no, we won't run out of WTI. Okay, look, to try and sound less insane, all right? If you remember when WTI was at a premium to Brent, we had sour contracts. I mean, the oil was coming from Saudi Arabia, but it was
this
being
spread is
bought
just-
by the U.S.
But this spread has just widened like this over the last 6 months. And if you look at this a couple of years ago, it was almost flat. It almost inverted again at one point.
Understood. And
But
what happened, all right, to my point, and you can't prove me wrong because I don't really have any proof myself, and China just launched a yuan-backed oil contract. And so the demand is moving eastward. And I think it's geographically, it's easier to get oil from Brent and parts east than it is from the U.S. I'm just saying, it's kind of like it's the way of the world. If you're a gold miner, if you deal in gold, you move your vaults to China. If you deal in oil, the demand is in China or Far East, and so the oil that's close, it's geography. Okay, just mark these words. The next benchmark for oil will move east from Brent when they run out of oil. I don't know if they're going to run out of it, but I just don't think WTI ever becomes a benchmark again unless our economy starts consuming its own oil again. That's why the CME has contracts in the Far East now.
Well, we'll see how that plays out. I don't know. Maybe, listen, we'll trade Nigerian oil if it's liquid and viable. But
I need this. Please, can we have this recording deleted? I don't want it. No. Here's a bet that could last years, Larry. You ready? I think the Brent TI spread sees $14 before it sees $6. Now that's a fair, equal trade in terms of vig on either side of it. I'll take $14 over $6.
I'll take the other side of that.
There you go. And I'm going out. I'm buying puts on.
Well, you're going with the trend, and I like it. But I would think that maybe we'll.
Well, even if I'm right, oil could drop $25, and that spread could collapse on its own without having nothing to do with my macro concept.
Well,
so
listen,
I have risk.
I don't know how oil can stay above $70. I mean, that's just my opinion. I don't see it,
and that's why I'm going out and buying WTI puts to hedge our bet.
Oh yeah,
you know what I mean?
I just don't see how it can stay above there. But again, it's just a trade. It's just positions, and everybody seems to be relaxed long oil at 73.5. So we'll see where that trade goes. We're short it. We're going to stay short it. Again, we're short S&Ps. They came in a little. They're up 1450. It's a painful one. We're going to sell some puts off the opening, probably on the. There's just nothing in anything. It's just, maybe sell the 20 or 25s, taking another buck and a half. Bring us up another $4. That would be $4 from the price. We'd be at 15. It's still not a great trade, but we think. It could work out in here, and we're not going to be married to the trade, and we'll put an upside stop in, and then maybe buy calls, against it, which we probably should have done to begin with, but we didn't. Overall, vol is, come in October to 1370. It was up at 1470 last week, so everybody's complacent and relaxed, and that's what I see from here right now. Looking back at the stocks, all the FANGs are up anywhere from 1% to 20 basis points. Nothing up too much. Tesla's up 42. I guess it's another squeeze. I wonder if people went out short over the weekend because the stock traded terrible and it was on its lows. So it'd be interesting to see if this is just position covering. And other than that, I don't see much else really to go over. Nasdaq came in about $10-12. Bonds firmed up. They're only down 13, back in the 140 handle. So pretty much it looks like a dead day. Looking back at the straddle, it's pricing in under 7, basically, for the
Right.
no, I'm sorry, it's 7.25. It's actually a joke. So the at the money straddles, even though we're in between the strikes, are 7.25 on both, and doesn't seem like there's much to do today. So we'll keep it here. We'll be in the chat. Do you have anything you want to add other than talking about Nigerian crude?
Yeah, I'm filled because other members are hitting my bid on the whole Brent WTI thing.
Oh, they are? I love
XTF
that.
just said sold, Vince. And Bryn put up a little bit of information, which makes me feel good, but I know I'm going to get my ass handed to me. Brent, Bryn just put up a cool stat that makes me feel good, but I'm still going to get hammered. Roughly 2/3 of all crude contracts around the world reference Brent blend, making the most widely used marker of all, which is why it's the benchmark. And I'm waiting for Bryn to tell me in 6 months it'll be Nigerian sweet or something. I have to pay her or something maybe to say that. But okay, fine. So now I'm long.
I had a question, and I don't really know the answer to this. As far as market size, what is the notional size? Maybe Bryn has an idea.
She would have a better idea. At one time, I remember that. Okay,
notional size of Brent versus WTI. How much bigger is one market versus the other market? It would be interesting to know, which one is actually a bigger traded on a notional contract basis, price, included on that. So it'd be interesting to know which is a bigger market, in general.
Yeah, I remember one time the Brent options market we used to hedge overnight when Brent was under WTI in the 90s. We would you couldn't get your options done, Brent, on the Intercontinental Exchange. It was before ICE took it over, and or whatever it was called. I forget what the oil exchange was called there, but the liquidity was nothing compared to here. But it didn't mean that the amount of oil was less. So now it's kind of inverted. Anyway, I'm not really making a point that matters, except to say that I think that even if there were more WTI than there were Brent would be the benchmark. So that's where I'm coming in at. I'm just saying that we're going to be a banana republic, but I'm a patriot, so I'll be careful with what I say.
It doesn't look that way, but yeah,
I'm pro-America. I'm just not pro-Americans.
I just, again, I don't know how the oil holds above 70. We're at 73 and change. It's funny. We were talking on air all the beginning of last month. Crude was like 66, 67, and we thought it would go. We were kind of bullish on it. And it actually has run about $3.50 more than I thought the top side of this trade would be. But again, that's what makes a market.
I remember talking about how oil holds this high. I remember Peter Butel, who's no longer with us, a great oil analyst, in my opinion, the best for like 20 years. Phil Flynn probably remembers him. He actually had done the math on. I did an interview with him, and I interviewed him. He did the math on the price of oil, the price of gasoline, and how much it cost he looked at it as a tax, and he did that. I should dig that up. Basically, if oil goes to this price or if gas goes to that price, how much of a tax is it based on crack spreads? And he would say it's like a $2 billion tax or a $3 billion tax on consumers. So to the point of, the cure for high oil prices is high oil prices. It's a tax on the U.S. citizens.
Yeah. It's funny. I just want to point out, like, so when they had that news, I guess, about the Brit exit, I'm watching my currencies, and it's like, it's just a computer, that has something programmed in about some type of news, and I watch it, and then I look back at it, and it's right back where it was before the news. It's like, it's almost a way for anyone to get out. They push it enough, and then they get to sell or buy to get out of their positions, and it's just a nothing headline. It's interesting.
Yeah.
The British pound came in.
Tracy just
euro.
popped one, and she threw a chart up that I think might make you feel good about your oil short.
Oh no!
I'm sorry. Are we fading each other now?
No. What did she put up
in the commodity room? She didn't say anything. She just said, she threw up one of her charts, and she said, which are always good to see. She said, "There's lots of damage still below." It's in the commodity room. If you want to throw it up,
damage below what in oil?
Damage below where the market is. Two different areas.
Yeah, I mean, listen. The first down day in S&P, I'm sure this thing will be down $1.50. It's just got to wait for the S&P to downtick. But again, I look back at these straddle prices, and it's just amazing on a $3,000 instrument that straddles would be pricing in $7. It's not even 20 basis points. So we're going to be quiet today across the board. We have a full schedule today. We have Joe Vaklovic from Standard Grain discussing ags and the overnight action in those markets. He should be on right after us. Then at 10 o'clock, Phil Flynn joins us from the Price Group. Fox contributor. I've known Phil for basically 30 years. And then at 10:30, Tony Greer is going to come on and talk markets, themes, and talk about different trades. And then at 11 o'clock, I'm going to come on and do a Q&A. And then at 1:30, as always, Adam Collins from Movement Capital, breaking down the latest COT data, commitment of traders. So, it's great information. I utilize it in my trading. I always keep it in the back of my mind where positions are too long or too short. So it'd be interesting to hear his thoughts today in oil and other markets around the globe. And that's the schedule for today. We'll all be in the chats. We're going to be very active. It's a new month. We're hoping, for good volatility and some good trading. And on my end, I think I've covered everything. I don't know if there's anything else, Vince, that you want to talk about.
Only that Brent answered your question as best I think that can be done quickly in terms of notional. The open interest in ICE Brent is 5.3 million. The open interest in CME WTI is 2.3 million. So there's your notional open interest difference.
Oh, those are barrels? Wow. Yeah,
I would think that's contracts. Yeah, contracts, not barrels.
Yeah. That's how I meant, contracts.
Yeah.
All right. So Brent is twice the size. So
but
that's the market.
It's probably well, that's the market. Yeah, exactly. But doesn't imply anything about. Look, I could be right 20 years from now, but 6 months from now, oil could be trading $25.
You and your 20 years, okay? I hope I live 20 years at this point, okay?
always make predictions you're not going to be around for. This way,
listen, I better be.
No.
I got too many people counting on that.
I hear you. I just feel like when you're bullish oil, buy Brent. When you're bearish oil, sell TI. I mean, but that's a macro trade. Micro, you should be. Look, if oil drops, Brent's going to drop more. That's a fact. That's all. That's it. That's all there's to it.
Well, that's just the spread. I mean,
I know, but the spread is a function. The spread is a function of interest. There are less people who care about WTI than there are about Brent. So WTI won't lead the market lower. It'll follow. It's almost like a tracking stock on Brent now. I'm just making the case that if TI is a great thing to trade, and I've traded oil for 30 years, mostly options and futures on options. Then Brent must be like just as fun, if not more fun. That's all.
I don't know. I think those are, like you said. I tried to trade Brent options, and it wasn't that easy, which is shocking if it has more liquidities.
No, the options aren't worth. No doubt about that. The options are not what they could be, and I think that's a function of how the exchange runs their product. But if you can't trade your options against your futures, which is a big part of your trading style, then you got to stay with TI.
Okay. Well, I appreciate you today and every day, and I'm going into the chat, and hopefully everybody has a good day. The positions are short crude and short S&P. The S&P doesn't feel like such a good trade at this point, but we're going to finance that a little bit more, put a stop on the upside, and oil feeling a little better about, and expecting it this month to be a little bit heavy, but it's early on. And
it's the first day of the month. We'll be fine.
Easy for you to say. I'm feeling pain right now. I'm in pain.
I'm flat. You're feeling pain.
I'm feeling a little pain. So anyway, I'll be in the chat, and I'll be back on the air multiple times today. And I wish everybody good luck in trading.